Okay, guys, welcome to our wrap up. I'm here today with Hans and Juhani Savonen, and we are about to explore the markets and the latest drama related to tariffs and everything about macro. But first, don't forget to check out our partner, Sideshift.ai. I'll add the link to our show notes. But yeah, about tariffs and I guess you guys have been following the drama and the mayhem going on. And Trump has announced new tariffs to basically all countries globally, and we have like different segments. EU got 20%, Switzerland got 32, UK got only 10, and also like European countries like Ukraine got 10%. I remember Turkey got only 10. So, like, how do you see this playing out, or is it just like a threatening? I named this podcast as Divide et Impera. So, like, my thesis is that he's kind of like trying to disrupt markets. So, like, basically, like, disrupt and divide the markets, and then like uplift his position or like the position of US as a whole. So how do you see this playing out, guys?
So I think that there's a non-zero chance that Trump will actually follow through with a lot of these. I think that some people saying that, oh, he's just bringing them to the negotiating table, but I think that Trump is actually kind of set on a lot of these. Like, of course, the amounts will be negotiated, but he actually is set on implementing a lot of these tariffs. It feels.
Yeah.
Yeah, I think it's kind of like just because like the voter base voted for tariffs, kind of like if you go to like Pennsylvania or that kind of states in USA, that's kind of like areas kind of like hit quite hard with globalization. So it's kind of like probably more like the policy what they want to do, so that they get like some industrial output back there. But that would also like mean high impact to Germany and that kind of countries which export a lot, a bit like Nordic as well, right? Because most of the Northern Europe is interlinked to the industrial base of Germany, for instance.
Yeah.
And it's kind of hard because US isn't competitive in a lot of fields in manufacturing. But then again, if the US wants to bring a lot of these jobs and capabilities home, then they're still not going to easily outcompete like countries like China or others, even with tariffs. So it's kind of a difficult effort for them to try to make happen, it feels.
Yeah. As Juhani said, that Germany and Nordics are pretty like exposed to um, uh, exports, and it's that's interesting. So I think like Nordics will be pretty hard hit with that. We only got like
Yeah,
20, but still, and especially like Germany's car exports and everything, and also like even in Switzerland with their like 32% tariff, they will be pretty hard hit. So yeah.
yeah, it's kind of interesting that they got like so high rate because they don't really move anything else than money and chocolate. I think so. The USA plus pharmaceutical, of course, which they have in Basel, but that's kind of like all of what Switzerland has basically.
Yeah. Do you want to see that is like globalization now over? Do you see it being over?
I think it's. I think this will definitely fragment the market so that
Yes.
you basically end up in blocks, and that also means slower stuff moving around. That's kind of like negative, right? Because you have less supply available of stuff, and that's
Yeah.
also like probably increases like risk of fights over land that has commodities, right? Because if you're gonna trade, then you have to find new ways to get the stuff. Like in before 1800s, like it used to happen in Europe, for instance, when someone needed more farmland, then it basically just end up in chain of wars, basically.
Yeah. Yeah, there are like many theories going around, and like Trump needs to he has some like kind of like game theory for this. But yeah, I think like maybe we are moving towards like global system where like we are producing more stuff locally, or how do you see it, Juhani? Could it be like, could it be, or is Trump seeing this new system where we could like have like robot or AI factories and produce a lot of the stuff locally, so you don't have to go to China, or you don't need this like globalization for these products. Obviously, for commodities like like oil and you still have this global market, but could it this be the direction we are going to? So, like this China phenomena, is it now over, or like partially, or what is now the direction we are going? Any idea of that?
I think if the tariffs stay like that, it definitely means that you don't really produce much in Vietnam, right? Like if you have really high levels of tariffs, like that kind of countries got. Like if you look at Asian countries, what the tariffs are, they're like definitely higher than anywhere else, right? So
Yeah,
that would kind of like reduce production in those countries and move it somewhere else, right, where the tariffs are lower.
yeah,
So that kind of like induces also interest to produce actually where it's consumed. That's kind of like also like the mathematics of tariff economics.
yes,
Because
I
yeah,
think that
because yeah.
this proportionately punishes certain countries where US is already manufacturing a lot of stuff, like the stuff
Mm,
that's being produced in Vietnam. Then large US multinational corporations that are just established like huge manufacturing processes there, and because of those American companies, the trade deficits are so disproportionate. So it's US companies that are producing, exporting back to US. And then Trump looks at it and he's like, okay, Vietnam exports to US, but US doesn't export to Vietnam. So they get a high tariff. So that kind of punishes companies and just forces them to change locations essentially,
Yeah,
which is kind of
it
dumb,
basically breaks down the supply chains, right? That's kind of like the
right?
because
But I think
because
that
currently you
also
could
leads to
like
another thing
yeah
that
yeah
I
yeah.
think that kind of leads to the thing that a lot of the trade deals are just forced to be renegotiated right now. I think that's the main effect of this Trump tariffs kind of game. That like everything, like nothing is taken for granted. Everything is being renegotiated right now.
Mhm.
Or what do you think?
Yeah. Yeah, it can also like push countries like China and EU to do their own deals without the USA, for instance. And that's kind
yeah,
of like also like
True, true, true.
that's
yeah,
kind of like the question of following months, I think, when they have meetings with Beijing and Brussels, I think, that what they want to do, because it's kind of like it's also like not like German's interest to, let's say, let's go along with the US stuff anymore. At least that's kind of like the current policy environment as well.
Do you reckon that that's also a thing that might lead to de-dollarization? That we're moving away from USD and maybe more into a Chinese yuan?
I think they start to use it more, I would say, but it's kind of like yuan is still like definitely smaller than euro, for instance, and that's kind of like
Mhm. Right, right, yeah.
just because the size of the capital markets and how China functions, right? Because there's like capital controls in China, so you cannot really take your money to Singapore, for instance, from Shanghai, for instance. That's kind of like the main reason why like crypto is so much used in Asia and places like Singapore.
yeah, yeah. Especially like USDT Tether has been used a lot in China for capital flight. So that's one of
Yeah,
the
that's
US.
kind of like all those countries that have, let's say, capital controls, like in Argentina, Iceland. People are just using cryptocurrencies to kind of like bypass the system to allocate their capital more efficiently.
Tether is very popular. So, but like about
Mhm.
Vietnam and China overall, like I think the main point is that China is still like pretty heavily sanctioned. So US has been sanctioning China, and they have been using Vietnam to bypass those sanctions. So they have been like shipping
Mm.
their products via Vietnam. So I guess that's one of
That's kind of like same
Vietnam
thing
or
in
Singapore.
Indonesia as well. Yeah,
yeah
because like
Mhm.
if you go to like some store in USA, you see a lot of clothes that are like stamped Taiwan, Indonesia, Thailand, or something like that. Then you're gonna like know that probably USA already before had like some rules how much stuff can come from, let's say, China, or I don't know how their rules work, but it seems to be the case that a lot of those producers were already producing in somewhere in Southern Asia.
yeah. That's right. So yeah, China likes to use these countries, as said, like Vietnam and Indonesia, to bypass some of the sanctions. So that in that sense,
Mm.
that makes sense. And but also it seems to be like a bit of a power grab in a way. So obviously, like everybody wants power, and I guess like by messing up the markets or by disrupting the supply chains and markets, you get power, and it's like the competition is getting harder between U.S. and China, as Trump has said. So it's getting tougher. So maybe this is like kind of like a power move. He's okay with the stock market tanking a bit, and then while strengthening his position, something like that. I would say.
That's the question. Like if we're talking about like game theory, and we're talking about like power grabs, how far is Trump willing to go? Like how far are we willing to let the markets tank? It can be a power play, but at the end of the day, he's also kind of responsible for like large interest groups. Like a lot of people who don't want the market to go down. So how far will Trump actually let it go?
Yeah, it's a good question. And today we got like news or rumors about like rolling back to tariffs, and that now we are seeing like cryptocurrencies also recovering a bit. So this might be his playbook, as this meme shows that he's implementing tariffs, then market falls, and he might be rolling back tariffs, and then market recovers. It might be his playbook, and now like many
yeah, it looks like that. Yeah.
now many countries have been approaching Trump's government in order to negotiate the tariffs. So at least Japan was like talking about it, and I think EU, I think every country wants to talk with him that could we negotiate the tariffs lower or something like that. So this is his game, and it could even like work out. We have been like condemning that now, and there's a lot of controversy around, but it's like I would say it's too early to say for now. It could even work, and yeah, so some pretty interesting stuff that's going on. So he imposed, I guess it was last month, he imposed the tariffs to Mexico and Canada, but then he rolled them back. So that was like he already did that. So that's pretty interesting. But like overall, I think we are in a rapidly shifting world currently. So like we have so many things. Like the status quo is moving fast. Or shifting fast, I would say. So it's pretty hard to say what is actually happening next. But if you look at Bitcoin here, now we are seeing Bitcoin dropping from like 85k to below 80. Now it's like 78k in USD, and we are seeing like actually retail buying the dip, but the whales are not buying, or like the big participants are not buying Bitcoin yet. So I think it could go lower still to maybe like 75k or something like that. So it still has room to drop lower. And but if you look at funding rate, it's still positive. So we are not seeing that much shorting going on currently. So funding rate is positive still, and yeah. And if you look at Bitcoin from like a broader perspective, it's still not that much below the power law. So power right now is like around 90k. So it's not like it hasn't even dropped that much, because the all-time high is at 108k. So we are not like, yeah.
I think that Bitcoin is showing remarkable strength. Like considering that overall, okay, like crypto market has had a downturn, a lot of the other coins have gotten like massively hit, and now the global macro has gotten hit kind of badly. I think with all of that considered, Bitcoin is showing actually remarkable strength. Like if we look at back in the day, we would have like minus 30% overnight on Bitcoin. We're not kind of seeing that kind of massive drop anymore. So it's holding relatively strong compared to like a lot of other things, it feels.
Yeah, I agree. There's like true resilience going on, and like And if you look at altcoins, like the altcoin market, it's destroyed pretty much, and like the high beta. But like Bitcoin is, you can see like its position is so established, I would say, nowadays, that it's not like reacting that fast. So yeah.
I guess there's also like a lot of inflow these days, like from ETFs and those things happening like weekly basis. So there's also kind of like make sure that there's certain level of demand, regardless
I think so,
of what
yeah.
happens. Yeah.
I think the inflows actually matter like a huge ton. And like if only at like this kind of like market state we are keeping stable thanks to the inflows, then if we are able to resume like a bullish trend, let's say we get, I don't know, anything like QE, we get like interest rate reduction or some other positive catalyst, I think that we could see 100K plus easily and possibly even like a proper continuation of the bull run.
Yeah.
Yeah, I think it has happened in the last 2 years that when we have significant increase, and it's pretty political actually how large the increase is, like last October, for instance, and it happened only like 4 weeks, I guess.
Yeah.
For 3 weeks, like the large move up. So it's kind of like interesting the way when that happens.
So like overall, I think Bitcoin is getting less volatile as we can see here. So the bigger it becomes, I guess it will become like
it's kind of quite common in most markets, I would say.
Yeah. So it really now has digital gold status, and I don't know, maybe it could go to 70K or even drop to 60 or something. But I think it will recover, and it will also like be pretty heavily correlated with Nasdaq and technology stocks in a way. So like many people repeat this like old fundamental, which is that Bitcoin is like a non-correlated asset class. I would say it was true before. Hans is a pretty old crypto guy, so it was true in like back in 16, 17. I think until 2020 when Saylor came to the market with his MSTR company. So like after like roughly after MSTR, Bitcoin has been more correlated with like the Wall Street or like I would say Nasdaq and S&P 500. So it's about that mainly. So
yeah, I think it's just because like Saylor basically buys when S&P 500 goes up. That's like typically the same period, and that's kind of like why most of the more like traditional finance liquidity indicators start to work quite nicely in the last 3-4 years.
So like Saylor has these pro-cyclical buys. He's not buying right now, but his last buy was just a while ago. So we'll follow that how it's going to play out. But we can now check macro quickly. Then we'll move to Juhani's models. Or Juhani, what do you think about this U.S. liquidity? So this chart is from Capriole. Fund, and so this looks like that the US liquidity could pivot here or turn upwards, or do you see?
Yeah, it's kind of like stabilizing. That's kind of like what I have also measured myself, like kind of like similar shape that I currently have.
Yeah.
So it's kind of like stabilizing, but not really like anything extreme happening, I would say.
Yeah.
It's kind of like the. Yeah, but that also chart shows kind of like the divergence between the price movement and actually the liquidity that we have seen in the last 9 months.
Yeah, that's right. Yeah, and like Capriola's macro index is also showing here this sell-off, but I don't know. Do you guys believe we could have like a new bear market coming, or how do you see that? I think this is my personal opinion, but I don't think like the cycle it's not over yet. So I would see the cycle continuing. So now we are having this tariff scare and recession scare, but I think we'll just like it will be okay, and I would say Bitcoin might reach new all-time highs in Q4. But who knows? But it doesn't look like the cycle is over yet for me in a way.
I think that Trump and the Fed doesn't want to let the US go into like a proper like economic downturn. But so that brings us to the next kind of like flip question. are they just going to print their way out of this? Are we going to see like a repeat of what happened kind of during the COVID crash, and we saw like a wave of like sustained printing? What do you guys think?
Yeah, Juhani, how does your like Fed's role here?
I think like Fed doesn't really want to show itself as a like dependent on the government. That's kind of like what a lot of people in central banks would like to show, that they actually are independent of what they do.
Yeah.
And just kind of also like the policy play in, I think in Washington now, that basically Trump tries to push the Fed to cut the rates. And kind of the data there is not really like that there shouldn't be cutting, because like prices are still increasing and it's relatively stable in labor market, like if they just follow the data, because they're like data dependent, so they don't really do anything unless the official data says something, right? So we probably would need some proper deterioration of the labor market or something to blow up before they react, right? That's like the typical central bank playbook, that they don't do anything without fire.
Yeah. So you still think that Fed is independent? So you wouldn't say that Trump could be able to pressure them to do
because Powell is like serving last years of his mandate period, so he doesn't really care, because you don't need to get re-elected, right? By president. So you can just run until next year, and then it's already like midterm elections, and then probably they have their other problems to do.
Yeah. Okay.
So what you're implying is that the Fed reacts slowly. So before that, Trump could create a lot of chaos, a lot of panic. The markets could bleed. It could be really bad, and then the Fed reacts eventually.
Yeah, exactly, and that's kind of like why we see that most of the funds are getting more bearish, because they expect that the madness continues and until something really blows up, right? Like employment, or it's like some banks start to blow up, like credit spreads start to increase and causes like panic in financial system, right? And then it's kind of like in their mandate to stabilize the market. It's kind of like what they are paid for, at least in the financial stability side of their mandate.
Yeah, that's kind of my take right now also, because it will take a while for the Fed to do like anything, but the markets react really quickly to anything that happens. Like Trump set some tariffs. I think that some of the market reaction is not fully in yet. I think that there's been like a first wave, but I think that we might be in for more. Like I am very careful in this state of market right now.
Yeah, especially in equities and crypto, it's kind of like tricky, like we saw today. It was a little bit surprising, because it was kind of like stabilizing on Friday already, but then it wasn't there. It was kind of like the interesting thing.
Exactly.
Especially in the sentiments and news flows, they were actually turning slightly positive in the end of last week, and now it's kind of like more like flattish, I would say.
Yeah, we can actually move now to Juhani's models. So let's check them
Yeah,
out.
actually, this kind of like the same thing as for the dollar liquidity, but I basically measured myself with weekly data, so you can actually see it when it updates more frequently, I would say. Like in most places, they give it by month that you normally see in turning around the Twitter, like or X. Like they normally use the MI or M2 as a proxy for it. But I basically myself calculated from like different data sources, like derivative markets and how much loans are granted and those things. And it's kind of like shows like the same thing that we discussed like a couple of months ago, that prices seem to be going to decline because there's less money available, and it's probably also lowers the sales of buys that MSCR can do. Yeah, and it's kind of like we're pretty precise with the 6-month lag, right? That we started to decline in middle of last year, and now we are gonna like this phase of burning down the asset prices in risk asset markets, like in equities and crypto especially. Yeah. That's kind of like the general story, and more like in the traditional finance side, I think so. And that's kind of like what we see also in the following slide. Can you flip it?
Could you like segment like crypto and Bitcoin here, or are you packing them all up like as a whole? So do you like include Bitcoin in crypto, or because like it's
they're part of the like the CFTC report. Like there's like futures on Ether and Bitcoin actually. Yeah, but I basically separated to the on-chain analysis actually, where I use the Bitcoin as a proxy, like the on-chain activity as a proxy for the crypto market liquidity. But it's kind of like the same. Both of these are like highly correlated, like 90%, I would say.
Yeah. Okay.
Level. So it's just like the case that you normally get the on-chain data faster than you get from Fed or other institutions, which have normally 1 or 2 weeks of lag actually in the reporting.
Right.
Yeah, and it's kind of I actually prefer to use the on-chain data.
So like calculate them as one. So like crypto.
Yeah, like it's kind of like separate because then I see what the traditional finance measures and what happens in the other side, but they're normally quite one-to-one actually.
Yeah.
Except like the traditional finance data normally lags like 2-3 weeks. Like we see here that this is slightly faster, that we see that this actually bottomed already in middle of 22, whereas the other one was somewhere in the early 23 when it started to bottom in terms of liquidity. Yeah. And that's kind of like why I expect still like that just lower, let's say, Bitcoin prices because the activity is like declining. That would be like the main thing that would support actually bear market in Bitcoin and crypto assets because there's less accounts available and
I think you're cutting out a bit.
Yeah, I think you only froze.
In my side.
All right.
Do you hear me?
Yeah, now you're back.
Yep.
Yeah, I think I had like some connection issue with some of my stuff.
So where do you see like the market bottom be or the support for Bitcoin? So as you can see here, the on-chain factor is still going down by your looking at your model. So how low can you see Bitcoin dropping still?
I think like something between 70,000 to 60,000 at least.
Yeah.
It's like the kind of band, I would say. It just depends what the data says, right? If we can get far lower if we just continue down, right? But I would expect that we would start to see like normally in this last cycle it took like probably 9 months before it turned, so it would be somewhere in June, July when we would start to see, let's say, increasing in chain activity if we really have, let's say, 4-year periods like that some people believe in.
Yeah.
Yeah, then it would be like June, July, August, like thereafter, like where we would expect it normally to happen, right? Last time it was also August time, like it's like the seasonality, right? That people start to buy risk assets in the end of the year.
I think Juhani froze again. I guess the connection in Amsterdam might be.
Yeah, I think that the on-chain factor kind of being measured, I think it kind of shows that a lot of the trading activity is forward-looking. So I think that leading up to the Trump presidency, I think that there was a lot of trading hype, a lot of like speculation, and I think that it kind of signals that a huge part of the economic activity that's happening on chain is kind of speculative and kind of gambling related. So people trying to, do like decentralized margin trading using a lot of these different type of products. And I think it makes sense that once the event actually has happened, Trump presidency, for example, and a lot of the other announcements that were made, then the market starts to kind of calm down. There's not like a next obvious catalyst to look forward to.
Yeah, it's because I think it's kind of like divergence from reality in that sense, and we basically saw it also in this news sentiments, like what news actually happens in crypto space. That we had massive increase of positive news, and then prices basically went up, and now we basically have had like probably 5 months, something like that, of more like less positive news all the time, and we had like a couple of weeks quite positive news. I guess like it's more like the stability of Bitcoin that people were writing about. And then we basically now have like today, like let's say not so good news day.
Yeah.
Obviously.
So divergence from reality, as you said, that is everything speculative in the end, or do we have any fundamentals behind this? But your market sentiment model shows that that actually the market sentiment has been recovering a bit.
That was kind of surprising actually.
Yeah.
But that was kind of like the recovery weeks that we had, or days, how we want to describe it. And now it's kind of like again in the other side.
Yeah, but like if Bitcoin goes to 60K, as you said, like I think at that point altcoins are totally totally done. So it's pretty.
Yeah, it's kind of like buying lottery tickets with cheap price. That's how I would say.
Yeah, yeah. So
But
yeah,
yeah, but I guess like that happened also last time as well. That also happens in equity markets, that when you have downturn, some of the equities just disappear. Like that's also like what has happening in crypto equities. If you look like what companies are left after last 4 years, because before like the 22 we had like a lot of mining companies going public, and now there's only 5 of 10 reasonable ones left, I would say,
yeah.
when there used to be like 20 or 30 of them.
Yeah, mining is a tough industry, and anyways, like if you look at Bitcoin's mining, like the difficulty was very low in the early
Yeah,
days. As Hans remembers, like you could use your home
Mhm.
computer to mine Bitcoin, stuff like that. But now it's very like industrialized, and the competition is high. I even think that people don't like realize how tough the competition is, because we have like public mining companies who mine in like places like in Kazakhstan and Russia and China, with basically like they could even have like negative electricity prices, and it's a very very tough market to be in. Probably like Marathon Digital is doing well, I think, but they have all the scale benefits, but it's not like I'm
yeah.
Scale is essential, yeah. Because
yeah,
it's ultimately a lot of all the different kind of efficiencies. So getting cheap power, being power efficient, having good chips. So it makes sense that a lot of these mining companies just get competed away. The margins are already kind of thin, and you need competitive advantages to survive. Only if you win an advantage, you are allowed to kind of make it in a mining game.
Yeah, it's kind of like it's gonna work if it's like side business, but these days it looks more like power trading. At least based on my like experience of power trading myself, is
right,
that it's kind of like the business model only makes sense if power prices are really cheap or you have really extreme prices, and that's why see in USA that most of these mining companies have centers in Texas or in northern places where there's a lot of renewable energy, like oversupply of energy that cannot be used, and that's one of the reasons why we see them in probably Russia and Northern Europe, especially. Why the data centers also go to Sweden or Finland, actually. It's just because there's so many hours of negative prices in the summertime because nobody really needs energy, right?
yeah, that's
And it's
right,
kind of like the same thing also in USA. If we look into those areas where the renewable capacity is available, like Texas is all over the year, unless there's like some extreme weather conditions like tornadoes or other like storms, right?
yeah.
I
And
think if
you
your Bitcoin mining operation depends on power prices, I think you already kind of lost. I think that the best miners, they are, of course, they are sourcing their electricity very cheaply, but I think they have like very efficient chips. I think that it's like a very important competitive advantage that a lot of people are just heavily not kind of accounting for. Like, if you have this kind of advantage, you will not share this. You will try to exploit it for the maximum you can yourself.
yeah,
Yeah, it's kind of like optimization goes, and it's same in powering generally. Like you try to figure out when you actually can run the facilities at the lowest cost possible, right? And that's kind of like what these
It has to
miners
be
try to do. So
24/7. It has to be
yeah,
24/7.
yeah, yeah. Yeah, it's you're seeing like so many of these small like mining companies also here in Finland and in Europe, and I was like analyzing this one a bigger mining company from Hong Kong, and their operations are basically in China and Russia, and I was thinking that
hmm
they probably are getting some like they're getting electricity prices basically they're
yeah, they're like cheaper,
the
definitely.
power
Yeah,
prices like zero, or basically they're getting like
yeah,
negative power prices. So how do you
yeah, like a couple of
that's
cents
like,
probably. I think so. Yeah, at least that's my experience of
how do
power
like
markets. That not,
yeah
normally these countries don't really have like emission markets like in Europe, that you have to buy those CO2 certificates to tell that this is green power.
yeah
Like that's also like the main reason why it's dirt cheap in Russia, for instance.
yeah
Like also like just because the gas is abundant, right? There's no like limit how much gas you can get.
yeah But like my point is that when the market is global and the competition is global, how do you compete with these guys who have like
Not really.
negative electricity prices?
By the best, there is no question. The market only rewards the most winning participants, essentially. If you're inefficient, you should not expect to survive. I think there's just no way.
It's a very, very tough market to be in. Yeah.
You also take your miners to the same country, to the same kind of power plants. You try to find the same kind of advantage and more.
Yeah, but while it's a cool industry, it's a very, very tough market. Yeah. Okay.
Yeah, it's kind of like the equities where you can actually know where those prices should go, right? Because it's kind of like on chain, and you actually see who mines the coins. And that's kind of like the interesting thing in these crypto-based companies, that you actually can analyze them better than, let's say, the normal ones, because you don't really know how much money they make every day.
Yeah, that's right. Okay, I think one more theme or thesis. I've been thinking about like privacy coins. So now and I'm mainly focusing on Monitor or XMR, which is this like old privacy coin. Also, we have others like Zcash. But like Monitor has been performing pretty well this year until the recent crash. But I was thinking that could be, in Europe we are going to have CPDCs later this year. Is it in October or something that will be announced? And I think there's a real like use case for privacy coins. So could we see this kind of like privacy coin renaissance coming up, or how do you guys see it? So this chart is about Monero and its hash rate growing. So Monero is still proof of work coin, and it's been mined.
Yeah. I think that the hash rate isn't particularly like exciting or important. Like, of course, mining kind of guarantees the network security in a way. So in that sense, it is important. On the like, if you mentioned like CBDCs, I recently saw that Korea is also starting to implement some trials, etc. I think that privacy coins can catch on, but I think more so maybe against, like, in the context of a lot of the regulations and restrictions that are starting to be placed. So, for example, also the EU recent regulations, MiCA, for example, I think that a lot of the EU exchanges that operate in the EU are starting to face a lot more restrictions and have to implement like a lot more rules for the customers. So in the context of all of that, I think it is natural that a lot of people may want to put their money into somewhere where it's more safe and more anonymous, let's say. So moving their Bitcoin off of exchanges, moving their funds into Monero or Zcash or some of these other privacy coins, I think that it's a move that could make sense.
Yeah.
But I don't know if the market is kind of pricing it in right now as a likely move. I think that Monero has always kind of suffered from like a lot of like price action shortage. Like, it's good tech, but is it a good investment? That's kind of the question right now.
Yeah, you're right. There could be like a use case for it, but then again, as you said, like, is it a good investment? That's another question. And I agree. But I would say that there's a use case for it, but then again, like, is it going to be a relevant investment, or is the price going parabolic? I don't know. But anyways, there could be like a latent demand for it, and even though it has been delisted from many platforms, it still has been performing pretty well. But this is just like my thesis, that privacy coins could see a new renaissance. But yeah,
I think it hits a spot. Like, it definitely hits a certain niche. And for those people that care the most about security and decentralization and privacy, you kind of choose between Bitcoin or Monero.
Yeah.
So Bitcoin price action wise has been kind of good and stable for now. But let's say Bitcoin gets hit somehow. Let's say maybe people find a way to de-anonymize, or maybe it just takes like a market action wise kind of a hit. Then that could open some doors for Monero. There is a potential, but I think that we should wait for that kind of bullish catalyst for something to spark and happen.
Yeah. Okay, well said. Juhani, do you have anything to add? Or
Not really. I don't think so.
Okay.
I think it just like generally it just depends on if people can really use it. Like in some countries where the privacy is a big thing, like Germany, I think the main challenge here would be like how willing people are using digital stuff, or they just start to like hustle gold in their house, which is in like the more like the common way of taking care of your privacy of your, let's say, wealth.
Right. Yeah. Did you see now Germany wants their gold back from New York? They want their gold reserves back.
They want it back to Bundesbank. Like they have like Bundesbank has one like filial or like smaller office in New York, and they want to move all the gold to Bundesbank in Frankfurt. Yeah.
Do you
That's
think
kind
they're
of funny.
getting it back easily, or will there's some like
I think someone was like speculating if they actually have so much gold in the Federal Reserve as they promise.
or is it the real gold or something else? Nobody knows.
It's all fake.
Yes. Has it been audited properly? Is it like real?
Probably not. Yeah, I think in Germany you can actually send people to check if it's gold or not, but it's in Bundesbank, but because of the transparency regulation.
Yeah. If you compare gold and Bitcoin as a digital gold, it's pretty hard to fake Bitcoin. So you can pretty easily fake gold bars and put something else inside of those.
But some of the metal trading like houses sometimes have issues that you actually have some metal bar, but it's kind of like just painted and it's somewhere there, and then you just promise to the client that's copper.
Yeah. There's
I
some
think
like
JP Morgan had like some issue. Was it last year? They had like some big news about Turkey trading with Turkey metal companies, and the metal was not actually what it's supposed to be.
Yeah, there are some metals that have like the same density as gold, are very close. So basically, they weigh the same as like the whole gold bar. So you could like pretty easily hide some other metal inside the gold bar, and then
you can basically melt it and reduce the amount of gold in the bar, and that's kind of like the main problem in metal trading industry, right? That because you need chemical testing if what metal that actually is.
Yeah. So basically, in order to audit them like properly, you would need to break down like every gold bar and check if it's actually.
It's kind of like costly, you know.
Yeah, it's a huge process.
That's the same thing in food industry as well. Like if you have olive oil, then you are actually your interest as a like oil trading company that you actually would mix the cheaper oils and just sell it as olive oil, and it's kind of like
right. Yeah,
similar story.
Yeah.
Like the meat. Yeah, like the meat things a couple of years ago. Yeah.
Yeah. Right. Yeah. There's been like fake olive oil in Europe, like Italian olive oil and stuff like that, like basic scams. So it's possible. Yeah. So maybe one of the Bitcoin's best features is that it's pretty hard to counterfeit or fake on-chain Bitcoin. So it's pretty hard.
It's easy to audit, and also like really cheap to audit as well. Like you don't really need to hire, let's say, pile of lawyers and chemistry people to test it.
It's true. Ship it in a second from one side of the world to the other.
Yeah. Yes.
And it's kind of like the main advantage, I would say, like compared to, let's say, having metal in your. Even though you kind of most people in, let's say, in the financial industry trust the banks that say that there's gold when there's like physical backing of, let's say, the gold certificates, but it's kind of like it just depends what kind of level of trust people have.
Yeah.
What people want to have in the end.
Yeah, that's right. Hey, I guess we can wrap this up. So thanks for your time and thanks for all the opinions, both Hans and Juhani. And hopefully we
thanks so much as well.
You as a guest again. So thanks, guys, and don't forget to check our other partner, Quant X. And okay, see you next time.
Yeah,
thanks, guys.
Bye.
Thank you so much. Take care.